So I can truthfully say I literally owe everything I have to taxation. I became an investor at an early age. The field interested me. I developed a career, and it got me involved in philanthropy. And of course, in financial planning, if you don't know anything about taxes, you know nothing. You are a fraud. You are a poser. Because, think about it, how you make your money will determine how much you pay in tax. It's better to own capital than to be a labor worker. The laws determine when you're taxed. If you own capital, you determine when you're taxed, not the government. And depending on the accumulation of your resources, there are all sorts of savvy ways to get it to your heirs or your charities. There are three broad trends going on that keep me awake at night. The first is we have a declining labor force participation. In 2000, we had about 62% of the eligible workforce working. It's closer to 60 now. And we've lost essentially 12 million potential workers. There are all sorts of studies about why that might be. One of them, though, is undoubtedly automation. And it's automation of things at all skill levels. There is software that can have lawyers predict how juries will react to certain things or how to decide cases. There's software that are used by radiologists to interpret more ambiguous readings from MRIs. So it's at every level. And you can see it most dramatically with an illustration of what was once the greatest, most valuable company in the world and is now a shell of itself. And the current giant. Apple Computer only needs 1.8 workers per $1 million of revenue. GM, heavily capital intensive business, it's over 5 million. So you've got increasing automation, fewer workers, and that comes in to the finances. So I have a question for you. How many of you would like to know when financial doomsday is coming? How many of you would like to know that? See, that gets my attention. So do you I'm sorry? But I'll elaborate. But get your pen and paper ready, because I'm going to test you on it later. It will be entered as part of my permanent record on you, because I have access to all your LinkedIn profiles. So I divided by R is greater than 20%. I divided by R is greater than 20%. So what I represents the annual interest expense we incur to finance the debt each year. R is the revenue that we take in. Okay. So when I divided by R gets to 20%, what that would mean is the debt as a multiple of the economy is more than 3. And in the history of the world, there's never been a functioning economy with it greater than 2.5. And the one that's inching toward that, Japan, has problems. So would you like to know where we are? Of course you would. Of course your inquiring minds want to know things like that. So we're only at 10%. So I cheerily say, we're halfway to doomsday. Nothing to worry about. But Uh, do any of you look at the readings on your side mirrors of the car? What do they always say? Objects in mirror are closer than they appear. And that is true, because all we need is a major disruption in our economy, occasioned by dropping a nuclear weapon. That certainly could happen. A dirty bomb, which would be more sinister. That would be a more slow motion suicide to the economy. But when you get the debt as a multiple greater than 2.5 to 3, basically you're faced with an impossible choice. You have to cut spending at levels the public won't tolerate. You have to raise taxes at the level the public won't tolerate. So that in itself is a beyond control. And in fact, in 2008, 2009, there were people that actually thought we were going to get to that place, because back in the era when $1 trillion was really worth $1 trillion, we basically threw $1 trillion into the system to make sure the system wouldn't collapse. Our ability to do that now is greatly diminished. 50 years ago, the debt as a function of our economy was only about 38%. Now, it's about 125%. So again, the more debt you have, the less wiggle room you have to respond to crises. So the idea of a robot tax is the idea of trying to tax, provide a revenue base, because we are losing all these labor workers for the stats that I mentioned. You might be surprised to know half of all people legitimately pay no federal income tax. And it's not because they have any razzle-dazzle tax dodges. It's a combination of they have relatively modest incomes, and the exemptions from the taxes are very high. The other is 3/4 of all Americans pay more for their Social Security taxes on their labor than they do on their for income. So again, you have this effect of you're losing taxpayers are contributing income and payroll taxes. And it's very hard to get someone who is off the tax rolls back onto the tax rolls. So you're faced with this idea of taxing robots. In a way, we already do that. I mean, intellectual property patents, we have ways of tracing the revenues from them. They could be taxed at different rates. But the idea of a robot tax would be, go back to, say, a company like Apple, because they have higher rates of automation inferred by the fact that they have fewer workers, they're going to pay more than a capital-intensive, very mature company like General Motors. So what's the big reason to do this? Big reason, of course, would be the revenue. And how you use the revenue is going to be very important. Part of it is we could at least use some of that revenue to reduce the annual deficits. As long as our annual deficits are growing slower than the rate of the growth of the economy, we can keep kicking the can down the road on the magnitude of our problem. Ideally, we'd like to use some of that to reduce the principal on the debt. But maybe most importantly, use it as a form of universal basic income. We've already done a controlled experiment on universal basic income when we had the COVID relief payments. The economists are having a field day trying to fully analyze the good that it has done and perhaps the harm. The other thing that we can do with the robot taxes. It's going to level the choice between using a human versus using the technology to do so. The considerations in doing so, these taxes are much more difficult to design than you might think. There's an idea that, well, we would figure out how much the companies would be paying, but they're not paying because they have robots, sort of an imputed salary. The other big negative of any tax is if you want more of something, tax it or tax it lightly. If you want less of something, tax it. The United States is an incredibly innovative country, still is. Hopefully it still will be. But to the extent you have tax, that's going to curb innovation. And then the last is, we may not have solved the problem because we tend to think of taxation as localized, state by state, but it's global. And we really haven't solved the global tax issue. In fact, you could argue this whole idea of corporate taxes is another fool's errand, because in the end, corporate taxes are paid by some combination of the workers who get less, the shareholders who get less in dividends, and consumers, because in the end, the taxes are priced in it. And because you've got such a disparity between corporations that pay taxes and those that don't, if you have a robot, you're going to have the same problem. Where do you put the robot? It doesn't have to be in the United States. It could be offshore. So my last idea is, well, could this happen? Well, I like to say the most powerful force in nature, you know what that is, by the way? The most powerful force in nature? There are some romantics in the group will probably say love, and, you know, how could, well, maybe not even the IRS, but I go back to the laws of thermodynamics. Inertia. A body at rest tends to stay at rest. A body in motion tends to stay in motion. And the best way to get a body in motion is a crisis. And when we've had big changes to our tax system, there's been a crisis. The robber barons of the late 19th century, John Rockefeller, Andrew Carnegie, Leland Stanford Sr., the income tax was drafted in response to them, as well as the later gift and estate taxes. And then, when World War II came, the United States needed to get their hands on hundreds of millions of dollars quickly, and they had mass withholding for all the workers. And then when we had the Great Depression, we needed to have a social program and a way of taxing them. So when you've got all of those factors going, that opens the door. I also think the public, we the people, we've got to be convinced we've reached the natural point of exhaustion of our current system. If you're in California, New York, Illinois, Massachusetts, Connecticut, you know the usual high-tax suspects. To the extent that the federal income tax rate is raised, those constituencies will scream most definitely the loudest.